Hello and welcome to Bell Direct's new Market Insights series. I'm Grady Wulff, Market Analyst with Bell Direct. As the saying goes, it's as good as gold, and that could not be more relevant than in the current market environment, both locally and around the world. In 2024, finding that pot of gold at the end of the rainbow might not actually be an urban myth. Gold has long been deemed the precious commodity that is a strong store of value. So what are the key drivers behind the gold rally experienced over the last 12 months as the price of the commodity sits around all-time highs early in 2024? The first driver is gold's hedge against inflation, which is a tale as old as time. While inflation in the US has had a slight uptick to 3.2% in February and remains above the target level of 2% in the US and 2 to 3% in Australia, gold acts as a natural hedge against the rising effects of inflation and cost increases of everyday life. Next up, we have rate outlook impacting the price of gold. A trend over the last 12 months has seen investors piling into safe haven assets at times of rate outlook uncertainty, such as after FOMC or RBA meetings, or when fresh economic data outlines inflation remaining sticky. At such times, we have seen spikes in the spot price of gold and upticks in share price for gold explorers, miners, producers, and gold-related ETFs. The most recent peak in the price of gold occurred on the 8th of March, where the precious commodity topped $2,195 an ounce due to the weakening of the US dollar, which gold has an inverse correlation with, and the outlook for interest rate cuts out of the Fed in the near future, given favourable economic data released indicating inflation continues to ease. Another factor driving the recent gold price rally is geopolitical uncertainty. When geopolitical tensions are high, demand for safe haven assets like gold is high, and therefore the price of gold rises. The war between Russia and Ukraine ongoing, rising geopolitical tensions in the Red Sea conflict expanding from Israel's war with Hamas, and the US-China strategic competition instability are just a few cases of current geopolitical tensions that are contributing to the rising price of gold in 2024. Finally, falling bond yields and a weaker US dollar are other contributing factors to the rising price of gold. The simple way to understand the USD gold relationship is that when the USD is stronger, it costs more to buy gold, thus weakening the price of the commodity. And when the USD falls, the price of gold rises as more gold can be purchased when the USD is weaker. Bonds, like gold, are deemed a safe haven asset during times of economic instability. With the idea of interest rate cuts on the horizon, bond and gold prices have begun to rise and yields have started falling. Big global banks and finance houses are also weighing in their opinions of just how high the gold spot price can go by the end of the year and beyond, with JP Morgan Research estimating gold will peak at $2,300 an ounce in 2025, and UBS expects the price of gold to hit $2,200 an ounce by the end of 2024, while locally, ANZ economists also believe gold will hit $2,200 an ounce by the end of the year. So how can you invest in gold in 2024? Gold explorers, miners and producers are one way of adding gold exposure to your portfolio. Some gold miners to consider in 2024 include Bellevue Gold, Spartan Resources, Ramelius Resources, Gold Road Resources and OreCorp. Buying physical gold through gold coins, gold bars or gold jewellery from a bullion dealer or jeweller is another way to invest in gold. Doing so has the advantage of giving investors full control of their own gold, but the downside is you need quite a good safe or secure methods of storage. And gold ETFs are another way to gain exposure. Gold ETFs are shares or units in physical gold bars or gold miners or gold producers that trade on exchange. With all that talk of gold, there is another commodity that is up for consideration in 2024 but is flying under the radar. Is it time to consider investing in silver? And in 2024, we cannot forget the stepsister to gold, which is silver. For investors around the world, silver has been a forgotten stepsister to gold over the years, but the price of the commodity is actually trading 11% higher over the last year, thus is another investment opportunity to consider in the current market landscape for 2024. Thanks for joining me for the first Bell Direct Market Insights video. Have a wonderful day and happy investing.